Well, if you're retired or retiring and you log on to check your investments 2 or 3 times a day, that's a recipe for mental health fatigue. If you do have an investment portfolio, is it set up with tax deferment in mind? Let's bring in our friend and financial expert, Andy Fass. Andy, welcome. Good to have you here.
Thanks for having me.
You've often said the best investments are the ones that help lower your annual reportable taxes. What would be at the top of your list?
Yeah, when you're planning for your retirement, it's like playing a game of chess. You got to look at not just today, but you got to look at a couple of steps ahead. We recommend a lot of times that people use 401k, max contributions to 401k, especially if the employer has a match.
Right.
Your IRAs, 2 types of IRAs, one that you have a tax-deferred contribution, or the Roth IRA where you pay taxes now, but you don't pay taxes down the road. So it really depends on your situation and where you think things will be 10, 15, 20, 30 years down the road.
Right. Now, you mentioned a couple of those things. Is there any other things you can do, like your health savings account?
Absolutely.
That also takes it off the top of your reportable, does it not?
Right, yeah. The health savings account is a great vehicle. Now, it does count to the annual limit you can put in,
right,
but you can put money in, take a current tax deduction, or if you're paying it from your payroll, it comes out of your taxable income, so it lowers your taxable income. And if your employer makes a contribution too, that's not taxable either.
Right.
So, and then you can use it for medical expenses, or by the time you turn 65, if you don't use it, you can use it for other things. So it's a fantastic vehicle for retirement savings.
So you really feel that if your company offers you 3%, 4%, that's free money, right? You should do that match.
Yeah, I hate to say free, but you're right.
Yeah.
It is essentially free money. And the mistake some people make is they either don't contribute enough to take that take advantage of that full contribution, or they only put in enough to get that. And they don't think about putting any more in, which if you can afford to do, we recommend, because that's going to grow over that time period, and you're going to get the effect of compounding.
In terms of, you mentioned investing, or this stuff is like a game of chess. Yeah. Are you good at chess? I hope you are.
No, I'm terrible at chess.
Okay, that's not good.
Yeah.
So what would be your advice in terms of navigating this game of chess? Let's say we're playing against Boris Spassky from back in the day. Yeah.
Again, you've got to kind of look down the road. I mean, tax deferral is a fantastic vehicle, but there are some consequences. You get to retirement, a lot of people think that their income will drop in retirement. That's not always the case. So you may be, we don't know what's going to happen with tax rates or the government. But so you got to kind of look ahead and take a snapshot of what you think your income may be, right, because the more you save in a tax deferred basis, when you hit that full retired minimum distribution age, you don't want that income to be so much it bumps you into another tax bracket.
Yeah, that's another tricky thing.
Right, and then you've got Medicare, IRMA, which the more you make, the higher your premium. So, it takes some planning and some forethought.
Uncle Sam always gets his slice
of the pie,
doesn't he?
He always gets his, no matter what.
Okay.
Yeah.
Andy Fass, Fass Wealth Strategies. Andy, thank you.
Thanks for having me.
Sure.